The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Good morning and welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettlear, along with Accunet Mortgage and Accunet Realty Advisors owner Brian Wickert and Chief Millennial Loan Consultant David Wickert. As always, if you have a question, you can call it or text it into us on the Accunet Mortgage talk and text line. That number is 414-799-1620. Last Sunday morning, we were talking about the implications and ramifications of the Equifax data breach. And you had mentioned that you froze up your credit, Brian. I did the same on Monday after an odyssey of dealing with all three majors.
Okay, you're absolutely right. It is an odyssey to get that done. And as I promised last week on the show, I did get a blog posted. Now, it did take me till Tuesday because it was, hard to write and try to make it clear. So we did actually email that out as well on an email blast to all of our customers and trusted advisors. But anybody today or any day can now go to Accunet.com, and right underneath the Rock Solid Pre-Approval, there's a blog post that I'm not giving advice. My attorney said you shouldn't give advice, Brian, because you're not a cybersecurity expert or an attorney. But I just lay out step by step what I think both you and I did, which was to visit each of the three credit bureaus, Equifax, Experian, and TransUnion. And then, as a reminder, you got to do it. If you're married, you got to do it for each person. I think that the typical person, and I addressed this in the blog, if you see your merged credit report with your spouse, it looks like all the credit data is in one bucket, but it's really an amalgamation of 6 reports.
We got good questions about what should I do with my not tech-savvy older parents, or like my teenager who probably doesn't have any credit history, but they still have a social.
Right.
Did you have a response to those?
Yeah, I did. On the elderly parents.
Just have them look over your shoulder while you do it for them?
Well, you're not supposed to pretend to be somebody else online. That's called pretexting. And so maybe if you took your laptop, I should do this for my mother and her husband, who are both 88 years old, and there's no way they're jumping on the internet to do this.
Yeah.
So you know what? I should probably go over there today before the Packer game.
Yeah.
Take my laptop and... maybe it would be okay to do it over the phone, but I'll go visit her. I haven't seen her for a couple of weeks. And type in their information with them looking over the shoulder, and I'll have Mom hit the enter button.
Okay. Well, there you go.
But, but maybe if you live out of town, maybe do a go-to-meeting, session or something.
Yeah.
But otherwise, you can accomplish it by phone, allegedly, and mail. And I did amend the blog post with a toll-free number for each of the credit bureaus. But did you have the same experience I did, Steve, that Experian was horrible?
Yes, and frustratingly from the standpoint of nobody has a human being that you can really talk to that can provide you with answers. We had a unique situation with my wife where, years ago she had her identity stolen, and we were trying to remember if we had frozen, her credit back then, and just to get answers as to how to navigate this thing. Why didn't they just freeze it from the get-go, and then people that were, going to need it unlocked or unfrozen for a mortgage or a car loan, then you wouldn't have so many people rushing into the system.
That's an interesting point. I think the answer is it's probably technically illegal, because the credit agency cannot make that decision.
They're just keeping track.
For a while.
Sure. But if you've been breached and compromised?
Yeah. I hadn't thought of that. On the topic of children, though, to David's other question, I'm thinking that the credit bureaus do not have a credit file on my grandson, even though he's got a Social Security number.
He does?
Yeah.
Okay, I didn't know that.
Sure, because Mom and I set up a 529 for him, college savings plan.
Oh.
Okay, so you had to have a Social Security number to do that. Most kids nowadays, you give your kid a Social Security number right away.
Okay.
But the way that the credit bureaus collect data on everybody is from creditors. It is my understanding they don't not like have a direct feed to the Social Security Administration so that every time a new Social Security number is granted, it doesn't like get uploaded to the three credit bureaus.
Oh.
It's only when
We Energy starts reporting on
Sears
you?
or We Energies,
Kohl's card.
Card, your student loan, when that starts to get reported, then it's like, oh, here's some information on a new person. So that's why I wasn't as hepped up about it. But the other thing I don't know the answer to, and by the way, I gave an interview to Paul Gores at the Milwaukee Journal-Sentinel and JS Online. That'll be coming out on Tuesday. They didn't have room to put it out in the Saturday edition, unfortunately. And I'm hoping that maybe he, in part of his Tuesday story, will look up the asset side of the equation. Because I was trying to remember, like when I can't remember my password at my bank to get into my online account, I'm thinking one of the things they ask me is my Social Security number to verify that I'm really the person calling to get a new password to my online account.
Oh.
So wouldn't that... So if I'm remembering that correctly, I sure hope they change the protocol to something else.
Yeah,
other
we
than
need to
that,
go to
because now
biometric
Maybe
ID.
to text your phone.
Yeah, biometric, yeah. Look through, let me do a face scan on my face deal. All right, so that's the update. A lot of good feedback on that blog post. Go ahead and help yourself. Forward it to anybody you like. That's at Accunet.com. The blog is down in the lower left-hand corner. Pretty easy to find. And now,
Great stuff.
what are we going to talk about when we come back? We got
Frontline real estate.
Yep, we got two good stories from the front lines of home buying and mortgage lending when we come back.
And if you have a question, you can talk it or text it in on the Accunet Mortgage Talk or Text line, 414-799-1620.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
So he's the longest-running tenured governor in state history and a former cabinet member of the Bush White House. So what does Tommy Thompson think of how this year's budget process played out in Madison? He joins John and Melissa during Wisconsin's Afternoon News at 4:34 Monday afternoon. Brian Wickert is with us. David Wickert is with us. It's the Accunet Mortgage and Realty Show. Now some interesting situations from the front lines of mortgage lending.
So I walked into a closing on Friday, and there was...
As you are known to do.
Now, anytime I am in the office, which is a lot, and there is a closing happening in the office, I like to go in and thank people personally for getting their loan from Accunet Mortgage, and that's a lot of fun. So these folks were buying a home fairly close to our office, just happened to be. And so I always ask them, how was the process, and, how did you get to meet your realtor?
The house hunting process.
The house hunting process and just the overall, home buying process, especially the mortgage. And first of all, they gave us rave reviews, really went out of his way to compliment our senior loan consultant, Jason Weber, who, he said, hey, anytime I had a question, no matter how dumb it might have been, Jason, treated me and gave me the answer and, never rolled his eyes over the phone or anything like that. And our veteran loan manager, Sherry Dooley. And then he also went on to say, and the realtor was right there, Christy Poppy from Lake Country Flat Fee, God, I love working with Accunet, and the main reason is we give both the home buyers and both agents a weekly phone call. Typically every Friday, the loan consultant calls the agent and the buyer and say, here's what's going on. Because you know what? They got other stuff going on all during the week. And we find that weekly update is just really appreciated by everybody.
It's currency. My favorite are when I'm calling with boring updates like, hey, ordered the appraisal. It's going fine.
Yeah.
Hey, got an initial approval. It's all good.
We're just counting down to closing.
Exactly.
Hey,
we've had the clear to close, and,
But there are certain milestones,
yes.
Like the appraisal coming back and then also the financing contingency that are really important. So anyway, so that was all fun to hear that great stuff. But then the interesting part of their story was their buyer's buyer. So they had accepted an offer that was contingent on the sale of their buyer's home. Well, their buyer's buyer was trying to sell their home. That fell through. So the daisy chain occurred where, 2 transactions back went south. Then our customer's buyer didn't tell them for 2 weeks. So they were a little upset with that.
Yeah.
That like, hey, well, I'm sure because they were trying to scramble and figure out something else. So now let's say we're 2 weeks from our buyer's originally scheduled closing, and now their house sales has fallen through.
Because they were going to use that money.
Correct. And their offer on the new house, which we did successfully close on this past Friday, was contingent on the sale of their home. Now, let the record show that if you're competing with the other offers, right now in this tight inventory market, it's really hard for somebody to get to accept an offer as a seller when it's contingent upon the sale. For this very reason.
Yeah, you're putting your purchase in the hands of people two
transactions down the daisy chain. All right, but here's the good news, and this is what I said I wanted. And Mike and Paula are the buyers who we did successfully close with on Friday. They just put their house back on the market with Christie, right? From being meaning they switched it in the MLS from we have an accepted offer to we don't. They got an offer the next day. They had another offer the next day from somebody who did not have to sell their home. And all they had to do was delay their purchase by 2 weeks, which I always think that sellers are going to be willing to do that, right? They're not going to let's go back out on the market because that's scary. If you come to them and say, hey, I need another 2 weeks,
they're probably going to stay at the table.
They would, I think 9 times out of 10, they'll stay at the table. So that was a happy ending to that story. When we come back, I've got a story of maybe one of the most troublesome amendments, problematic amendments I have seen that I can remember relative to the home inspection. I'll tell you all about that and how to avoid it when we come back.
Right here on the Accunet Mortgage and Realty Show.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
What a doubleheader we have on tap here today at WTMJ. First, the Crew continues their hunt for Brew October as they play the finale against the Marlins out at Miller Park. Bob and Jeff will begin our coverage of that one at 12:35. Then tonight, it's the Packers and Falcons on Sunday Night Football from Atlanta. Our coverage of that clash will begin at 5 o'clock with the Packers preview, sponsored by Catholic Financial Life. Right now we're in the midst of the Accunet Mortgage and Realty Hour here on WTMJ. Brian Wickert, David Wickert with us. And Brian came across a really troublesome amendment from the front lines of mortgage lending this week.
Yep. We have a purchase transaction going on an FHA loan up in the Fox Valley. And we got the amendment related to the inspection. So here, listen closely, David. Here's the first problem. Seller's expense to repair, replace the following prior to closing and provide paid receipt to buyer prior to closing. What's the matter with that language?
We need more time than just 5 minutes before closing.
Correct, because wait till you hear the list. And on an FHA loan especially, now that we have this information, we're going to give it to the appraiser. The appraiser is going to very likely change his report from being as is. So there's a little box at the bottom of every appraisal that says, my value conclusion is with the property as is or subject to. So 99% sure that after you hear this list, the appraiser is going to change it to
you got to fix
subject
these things.
to.
Yeah.
Which means the appraiser's got to go back out and confirm it's all done. All right, so here's on the list. Qualified contractor to install earth anchors, 7 of them, because you got a bad foundation wall. Licensed electrician to correct electrical issues referenced on pages 33 and 34 of the home inspection report. The items to correct are numbered blah, 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 blah.
Wait, you referenced a actual page?
Yep. And then, did I say in the first one, per foundation inspection report? Okay, then the third one, qualified contractor to fix the leaking thing, per item 8 on page 33 of the home inspection report. And then, what I didn't even catch on the first look, and David did, on the very bottom, the attached home inspection and foundation inspection report are made part of this amendment, which makes it part of they're talking now the entire report. So, David, what little problem does that cause for a mortgage lender?
Then we have to gather those reports and forward them to underwriting. We have now opened Pandora's box.
Mm-hmm. So
no.
I took a look. I took a look at the just the summary page, and then I took a look at the foundation report. So I didn't read the whole thing.
Can I back up a second? Because an inspection is not done for the mortgage guys.
That's right.
An inspection is done for a buyer to make sure that the roof's not caving in, or so that before you even keep going down that path, you make sure the house is in good condition.
That's right. So, okay. So the idea is that a mortgage lender has to represent and warrant to FHA or Fannie Mae that the house is in good and marketable condition and that there are no safety or health issues. So all these things on this list that the guy's got to fix, the foundation, electrical, plumbing, great. Those are all things that have to get done before closing. So problem number one is the agent is like, well, no, I got a lender up here that'll allow this foundation thing to be done after closing. The rule in mortgage lending, unless they got some fantastically risk-embracing lender up there, is that if it can be fixed before closing, it must be fixed before closing. Okay? And the only reason it can't be done before closing is contractors are busy, so they're 4 weeks out, and especially on an FHA loan. Then I pop into the home inspection summary page, and I found, are you ready, 7 more things in just this summary of the home inspection and that foundation report that I believe an FHA underwriter for sure will flag as being material and either a marketability, health, or safety concern, and therefore would have to get fixed before closing. Here's the remedy. Had the amendment been written, not looping in the entire report and making it part of the offer, so I don't know why the guy did that. And then instead of referencing the report, you just take the items out of the report. I know it's a little extra hassle. I know it's a little extra time, but just list them out. Do not reference the report. In my opinion, as a licensed broker, you do not have to do that in an amendment. This is inside baseball talk now for any agents that are listening. You might have to do that if you're giving a notice of defect, but this is an amendment. An amendment is not a notice. It doesn't have the same standards of having to really call out items and call them a defect. Because once you put this stuff in the amendment, you're making your lender look at it. So I think this deal is either dead or going to have to take a lot of other things getting fixed prior to closing to make it work. Don't do that. All right, when we come back after the news, what are we talking about, David?
We're going to talk about our friends from WIDA who stopped into our Accunet HQ to talk shop.
That's right. WIDA, the world's best first-time homebuyer program. We're going to talk about that on the other side of the news.
Belinda Babinek joins us now at 10:30 from the WTMJ Breaking News Center.
Demonstrator.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Brian Wickert is with us. David Wickert is with us. And this past week, the fine folks from WIDA stopped by. If you're a first-time home buyer, some great credits for first-time home buyers here in Wisconsin. So how did that visit go?
Great. WIDA stands for the Wisconsin Housing Economic Development Authority, WIDA, W-H-E-D-A. And we've been doing WIDA loans for a long time, and don't get scared at all. They're 30-year fixed-rate loans. And actually, WIDA happens to be selling them to Fannie Mae. So it's all fairly normal, except it's better than normal. It's way, way better than normal. And the governor, though, on it is they have income limits. And so and the income limits are based per county, and it depends on how many people are in your household.
I can tell you that in Waukesha, Washington, Ozaukee, and Milwaukee County, if you are 1 to 2 people, you got to make less than $72,400. But if you have any, what are they called, dependents, or a family size of 3 or more, you can make as much as $83,260.
So that's for the super special deal on first-time home buyers. Okay, that's where you get the screaming great rate. You get reduced cost PMI. They also have a really well-priced option if you're putting 5%. Turns out that it's best if you, let's just say this, they have a no monthly PMI option at WIDA. And it is kick butt, especially if you're putting 5% or less down. Because, David, what's the minimum down payment you can do on a WIDA loan?
Zero.
How is that accomplished, son?
We do 97% of the purchase price on a first mortgage, and then WIDA, using their own money, will bring the other 3%, and it's on a fixed rate at the same rate as the first for 10 years.
Yeah. So what's the APR looking like on those? Here, I'll give David a chance to
Pretty
do that.
slick.
So that's the first-time homebuyer program. But wait, there's more. You do not have to be a first-time homebuyer to take advantage of WIDA.
Correct.
I call it regular WIDA. And on the regular WIDA program, the income limits are $83,260 for 1 to 2 person households, and jumps up to $97,740 household income if you have 3 or more members in your household. That covers a lot of the market. And there's one other restriction, which is purchase price. Do you have that handy?
$253,809. That last $9 is important.
Yeah, and that's for single-family detached. WIDA does not do condos.
Yeah.
Okay. Excellent for duplexes.
You can do 5% down on a duplex,
Okay.
which is awesome.
That's where your only other choice for that is an FHA loan. And so the other cool thing is there are no adjustments. If your credit is less than perfect, and we were trying to do 3% down on a regular Fannie Mae loan, you will get beaten up the head and shoulders on pricing, both for the rate and the cost of the mortgage insurance. But if we go with WIDA, let's say you have a 659 score, as long as it goes through Fannie Mae's automated underwriting system and gets an approved eligible rating, there's no deleterious, effect on your interest rate. And then we would definitely go with the no PMI option, because the PMI companies, rightfully, they do adjust for credit score. But with the no PMI option, it is really the best. It's always the first stop. If you are buying a home in Wisconsin with Accunet anyway, we're always going to take a look at the WIDA option as one of the choices versus anything else that's out there. So,
My only other comment is on that 0% down. It's an opportunity for us as your mortgage friends to collaborate with your real estate agent, because if you are able to pump in...
Hey, guys, we're starting to get some distortion here, some digital garbage. We're going to take our break here a little early and then come back with more on the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert. We'll reestablish our signal here on WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
So, are fans right to call tonight's game a revenge game for the Packers against the Atlanta Falcons, or is that overstating it? You can discuss with Matt Pauley during Wisconsin Sports Weekend, beginning at a special time, 11 a.m. here this morning on WTMJ. Brian Wickert is with us. David Wickert is with us. We were talking about WIDA for first-time home buyers and why that is just so key to make sure you really look at those options before moving on.
absolutely. And we were saying, the main thing you have to do for a WIDA loan, which is really the most efficient way to borrow money, because you can do 0% down. What was the APR again, David? Did we decide?
4.29 on the no MI option.
With the no monthly PMI option, 4.29, 0% down. That is amazing. The restriction is income related, and $72,300 for first-time homebuyer program. Higher if you're, if you make more money, we might be able to fit you in, right? But so how many people qualify for this program? Well, the U.S. Census Bureau just put out this last week the numbers related to income specifically and some other things that they have put together for 2016. So hot numbers right off the press. And the headline number that was widely reported, which is great, is that the median income in America is now, household income this is up to $59,000. That's up $1,800 over 2015. Everyone likes to be above average. So if your household income is above $59,000, congratulations, you are officially above average. Now, we don't have the 2016 numbers for Milwaukee's metropolitan statistical area yet, but I did a little hypothesis, and if we went up the same as the rest of the nation, we will be at $58,000 for our median household income in the 5-county metro area. David, how much home can you buy in the Milwaukee market if you make $58,000? If your household's got $58,000?
I did this math, but the answer is a lawyerly one. It depends.
Oh yeah, but okay.
If only because if you make that kind of money, you're making about $4,800 a month, and I got to fit all your debts into about $2,100 in your debt to income ratio. The affordability calculation we got to do.
Okay.
So one of the things that goes into that is your property taxes. So it depends on what county you buy in. If you're buying in a place with higher property taxes, if it's about 3% of the purchase price.
Okay. That would be like Milwaukee County, like a West Dallas, maybe, city of Milwaukee.
Putting 5% down, you could probably buy about a $150,000 house. And I'm guessing you've got maybe $750 of other debt, car payment, student loans, whatever that might be.
Okay. So that's a big assumption too. How much other debt are you carrying?
Correct.
We assume $750. Now,
if the property taxes are a little lower, maybe 2% of the purchase price, you could buy a $170,000 house.
Okay.
And I'm going to keep going. If the taxes were 1.5% of the purchase price,
so kind of more like the outlying counties, not Milwaukee
County, Washington County,
Waukesha.
You could buy a $190,000 house.
Okay.
Because you know what I call that? The property tax monster.
Okay, the property.
Because if you gotta fit within a certain bucket, the more of that goes to property taxes, the less that can go to the mortgage side of things.
All right. So if you're a parent or a grandparent out there, or a possible first-time home buyer yourself, so you know somebody who's renting, your mission this week should be to remind them that A, rates are really low, and B, Accunet Mortgage has access to the awesome WIDA program, where you don't even have to make a down payment. It can be 0% down with their 2 mortgage solution. And what you really need to do is click on the blue button to get your own, customized analysis. Because remember, we just were doing numbers for somebody that wouldn't qualify for WIDA. And we wanted to cast the broadest net here. Maybe they would, though, actually, because we were saying $58,000. It's a great time to buy a house. And get this, the housing season has extended. We had one of our better application weeks this past week, not only for refinances, but also for purchases. So I think the people who were frustrated with the really competitive summer market are out there, and they are getting accepted offers. So don't try to do this yourself. Now, if you want to at least take a peek, like what would my home payment be? You can go to our website, Accunet.com, and if you go on your mobile device, there is a green button that says Download Mobile App. A couple of keystrokes, bam, you've got our mobile app right on your phone, and there are some awesome calculators on there where you can accurately calculate a monthly payment, including taxes and insurance, and the cost of monthly PMI if you're putting less than 20% down. It also has an affordability calculator, so don't play around with that for too long or get yourself all jammed up and think, well, I can only afford this. Ultimately, the right step is to talk to a qualified loan consultant, maybe one of David's team of millennial loan consultants, to find out exactly.
I got a new title at the top of the show today. Thank you.
Yeah, Chief Millennial Loan Consultant, David Wickert. All right. When we come back from this last break in the show, I'm going to give you some other kind of wonky highlights from the census survey. What else, Dave?
I just want to give a little bit rate roundup as well.
Okay, a little rate roundup because rates are still great. We'll do that after this break.
Right here on the Accunet Mortgage and Realty Show. And if you have a question, you can talk it or text it into us on the Accunet Mortgage talk and text line at 414-799-1620.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And David Wickert as well. We've been kind of parsing through some of the latest census data, starting with household income nationally and also around southeastern Wisconsin. Other wonky little tidbits from the census?
Yeah, I can't help myself when I get into this. I'll try to be brief so we can get to more of the important stuff, perhaps, where rates are and how much money you can save. Couple things. Age. So remember, $59,000 is the median income nationwide. Then just looking at demographics, 23%, or a little less than a quarter, of our 323 million population is 17 years old or younger. 15% are 65 or older, and a little over half, 52% of Americans are in what I think of as their prime working years between 25 and 64. So that's just kind of interesting. Not as many old people as I thought, frankly. That was my surprise.
Not yet.
And then from an income standpoint, now I'm switching gears. Remember, the $59,000 is the household income. These stats are for individuals now, and a weird age break, age 15 or older. So presumably there's going to be a lot of people that are 15, 16, 17, 18 that don't have any income. But the percentage of Americans that earn $75,000 or more, a quick guess, David.
A quarter.
Steve.
Let's see here, 37%.
13% only.
We're optimists.
Individually earn $75,000 or more. And $50,000 or more, then that makes your answer right. It's 25%. Okay. All right, so let's talk about where rates are. Rates are really, really low.
Yeah, so, I'm going to do a specific example. We have been calling our past customers if you bought a house this spring.
Okay.
The Freddie Mac survey had rates somewhere floating around 4.25%.
Okay.
And if you had to get monthly PMI as part of buying your house, please let us help you see if we can do an option with no monthly PMI. In the scenario that I drew up, $250,000 purchase if you put 5% down.
Okay.
We could do an option with Rockstar Credit at 760.
Okay.
Where we get rid of your monthly PMI.
What does that save you?
$1,000 a year. And I can keep your rate the same at 4.25%, APR is 4.26 with $400 in costs.
Wow. So wait a minute, David. My rate doesn't have to go from 4.25 down to 3.25 like my grandpappy told me.
No,
Your rate's got to drop a whole percent in order to make a refi worthwhile. Wait, you just said we could help somebody save $1,000 a month
just by getting rid of their monthly PMI.
Does their house have to have gone up a whole bunch in
Nope.
value?
Same value as when you bought it this spring, and probably, quite honestly, with a summer full of strong sales,
Might have gone up a little bit.
Value might be holding steady.
All right, so there's one call to action. If you bought even as recently as this spring or winter?
March, April, May, absolutely. The other is, so then my other rate roundup is on that same $250,000 value, I'm modifying what you talk about, which is 20% down,
All right.
or 20% equity. Accunet at the end of business on Friday could do 3.875%, which is $800 in costs. APR's 3.89.
Or I bet a 3.99.
No cost.
Are you out of your mind? 3.99. Are you out of your mind? No cost. That's like a Denny's deal.
Wow.
Yeah. So rates, other maneuvers that we're seeing people do in terms of all the great feedback we got on our blog post about what to do in reaction to that Equifax data breach. I was looking at people and emailing them back and saying, you're welcome. Hey, by the way, I just noticed your rate's at 4%. I'm going to have your loan consultant, Jaime Suro, cook up some numbers because I wonder if we could reduce your remaining loan term from 27 years. So this was a guy who had started with a 30-year loan at 4% 3 years ago. So he's got 27 years left.
Yeah.
We can lower his rate just down to 3.75, I think it was, maybe even 3.875 on a 25-year term, okay?
Yeah.
His payment's not going to go up, and he's going to save, $20,000 of interest over the remaining life of his loan.
Pretty slick.
Oh, and how much cost? Very low cost. So
the other option that I wanted to talk about was the 15-year. Hey, if you're 40 or 45 or 50 years old and you look at your spouse and you say, I would like to not have a mortgage when we retire, we could do a 15-year fixed at 3.25%, which is $400 in cost. APR's 3.28.
Or the trophy rate that gets people excited, 2.99. I think when I did that last year, you had to pay us 5/8 of a point to get that, plus regular closing costs. So that's going to be, I'm going to guess an APR of 3.15.
Yes.
David's cooking it up.
I just did it.
There you go. Yeah. See, there you go, 3.15. Hey, so the message is it's not too late to get pre-approved to go out there and buy a house, especially if you're a first-time buyer. At least you don't have a house to sell, and that's going to make you good.
Yeah.
We've got the great 0% down product with WIDA, with no monthly PMI required. Even if you make too much money to qualify for the WIDA, we can do 3% down for first-time home buyers on a regular Fannie Mae loan up to $424,100 a loan amount. So a lot of options out there.
And just down that path, I think one of the things that our loan consultants are quite good at is having a conversation about what is the best balance between down payment and how much cash maybe you want to have left over after you move into your new house.
Correct.
Which is more real, as much as people might not have the down payment that they want. Having a conversation about what is the benefit between 5 and 10% down is one we're comfortable having, and doing the analysis of saying, hey, you're going to want to buy a snowblower and a lawnmower after you buy this house. Let's at least think about life after you have purchased
Moved
this
in.
home. Yeah. Which is,
So there you have it. Really great rates. Still a good time to buy. Boy, this week has been great. I bet this weekend will be good for home buying, especially the Packers not kicking off until 7:30. And we'll be back here again next week. We've got a lot of Sunday radio shows here before we get kicked off by a noon Packer game. So don't forget, go to Accunet.com for the Equifax blog post, or while you're there, click on the blue button and find out how much you can save with a no Social Security number required refi checkup. That's ACCUNET.com. See you next week, Steve.
You got it. We'll check in with Belinda Babinick next from the WTMJ Breaking News Center.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.